our next panel discussion. And the topic of discussion is why invest in Bangladesh? And the moderator for this panel discussion is Mr. Mirza Salman Hossain Beg, founder and CEO iKORI. Requesting him to come up on stage, ladies and gentlemen, please give him a big round of applause, followed by the speakers. Speaker, Mr. Rahat Ahmed, founder and managing partner, Anchorless Bangladesh. Oussama Glilah, managing partner, Razor Capital. Sajid Rahman, managing partner, MyAsiaVC. Zahida Fizza Kabir, CEO, SAJIDA Foundation. Ladies and gentlemen, our next panel discussion, why invest in Bangladesh? Thank you.
Once again, a very warm welcome to all of you who are joining us at this Startup Connect 2025 as part of the Bangladesh Investment Summit, and also in today's panel right now, why invest in Bangladesh? This is a very, very important topic for all of us, whether we are founders ourselves looking to raise money or whether we are investors evaluating Bangladesh as our next destination. But not only for early stage investors, but also for growth stage investors to continuously support this ecosystem and understand how better ways to find their justification to invest in this market, understand their exit potentials, as well as how they can further bring in more FDI to build the overall economy, which is one of the fastest growing, over $100 billion GDP economies in the world right now. So without further ado, I want to again thank all my panelists, esteemed panelists. We have very mindfully curated a group of panelists in this session today who have all been very well invested in this country. They have a very clear thesis as to why they have been investing in this market. They have been involved directly, indirectly with their institutions and their individual capacity. So I want to start with my friend Rahat. So Rahat has been investing as part of Anchorless Bangladesh for a while. And Anchorless Bangladesh has been also one of the early believers of this ecosystem when you first came in and started investing more than 5 years back. So what are the core macro trends that you considered at the time that helped you sort of believe in this ecosystem and then wanted to come on that early? Rahat.
Sure. I think one thing to notice from an international investment perspective is if you look at the whole world at this point, we're in 2025, right? If you lined up all 193 countries in the world and you looked at investment versus opportunity and market size, Bangladesh actually pops out. Now, what do I mean by that? There are arguably only a few countries left with a young population, a highly, dynamic middle class and consumption appetite, and countries that are effectively under the radar when it comes to global FDI. The 4 countries that I would normally put in this group are Bangladesh, Pakistan, Egypt, and Nigeria. All countries with about 100 million plus people, up to 200, all growing, all with a diaspora, and all able to give returns to international investor at the highest level. That alone has generally worked really well for us. And I think the easiest way I can say it is, I tell founders to often give me a 15-second pitch. I'll give you my 5-second pitch I give to investors. You missed out on China, you missed out on India, you're missing out on Indonesia. Put a little money into Bangladesh and see what you can do. It's really just that simple.
I think that's a great start. Oussama, I'm going to come to you next. So from Razor Capital, you guys have been also investing, not just in Bangladesh, but also many frontier markets, emerging markets. So most of the VCs are not necessarily only focusing on emerging markets, but you seem to have a very strong thesis on that. Tell us, what exactly is it that you see when you are investing in emerging markets, and how do you compare Bangladesh as an emerging market with the rest of the frontier markets that you've invested so far?
Thank you, Salman. Interesting question. So we invest, when we look at frontier markets, we tend to focus on Vietnam, Indonesia, Philippines, Bangladesh. We do have some MENA investments, but backing mainly Lebanese founders. So in some ways, that's also frontier. I mean, in the context of Bangladesh, just to read my notes, there's a few things. First of all, From a high level, it's really not that different, right? And what do I mean by that? You have youthful demographics, you have reasonably early or immature ecosystem that doesn't have like a full liquidity cycle, or you don't have enough participants, capital scarcity, and these sort of things. But when looking at Bangladesh, the answer is two ways. It's objective and subjective, right? The objective part, when we look at the data, the ecosystem, and specifically because we like to look at consumerism, they are definitely at a much earlier stage than the other ecosystems or markets that we invest in. And that's not a bad thing. That's actually a good thing because it provides plenty of opportunity in the sense where we can look at these other markets and see where they have gone, what founders have done, and then how does that apply to Bangladesh. Now, on the more subjective side of things, I mean, looking at the culture of Bangladesh, I feel the Bangladeshis, and looking at the history of Bangladesh, they have a tendency to be more entrepreneurial. They are a trading population. And, not to take away from the other markets that we invest in, I just feel there's a lot more hustle going on because I think the difficulties and challenges that you see in Bangladesh are just so much more than the other places that we look at, right? And then finally, I mean, what we tend to see here is there's a lot more outside of the box initiatives and local innovation for local problems versus other places that tend to focus more on taking outside things and localizing it. So that's what I think is different.
I just want to ask you a quick, small follow-on on that, just to double-click. You did mention about the hustle culture and then the talents. Compare Bangladeshi the young founders' talents compared to the emerging markets where you're investing as well. How do they sort of, in your benchmark qualify?
Okay, so I get a lot more follow-ups than Bangladeshi founders. I do see when there's challenges with Bangladeshi founders, they tend to come up with other solutions to generate growth and deal with their challenges. I mean, it's a tough question to answer because anyways, when you're investing in a startup, you need to look at the founder. So regardless of the market that we invest in, the founder has to fit a certain criteria or a type of character or personality. But having said that, even the people that we don't invest in, I just see on average the Bangladeshi founder to have more intensity in follow-up, to come up with solutions far more easily, and to come up with, even if it's good or bad, it doesn't matter, but just ideas on how to deal with challenges, especially around capital scarcity.
Yeah, no, I think that's a great takeaway, I'm sure, for many of the aspiring founders. Zahida, I'm going to come to you next. So you're definitely, someone leading one of the most successful social enterprises in Bangladesh, and you have a very strong mandate to invest in impact-driven, mission-driven, ventures. I wanted to first briefly share a little bit about SAJIDA, so everyone gets to understand a little bit, and then maybe share how do you sort of, build your thesis for Bangladesh when you're investing into more mission-driven, impact, social enterprises as well. Yeah.
Thank you. So starting with following up in what you said, that you invest on the founder. We are looking at the person. So Sajida and Renata's journey started with a person with strong values and principles, moral standards, and a deep commitment in social impact. A corporate personality who dealt with financial returns all his life, but believed in social impact. So that's how a journey of a multinational, which was Pfizer Bangladesh, transformed into Renata. And Renata's contribution created a base for a foundation like SAJIDA Foundation, which again, started to invest for social impact. So it's kind of a snowball effect. So when the founder does the right thing at the right time, and you continue. You are consistent, and you are learning from your failures, and you are continuously innovating. And this is what happens. So in 30 years of journey for Renata and Sajida Foundation, so Renata is close to $1 billion company, and Sajida is one of the leading NGO in Bangladesh, and also a key player in the impact investment space, and maybe much more in the coming future. So this is kind of an example that what are we actually talking about here? We are talking about marriage between private sector, public sector, and working towards a better world, right? How do we address inequality? How do you empower communities? How we increase human capabilities and making sure that nobody is left behind. So of course, these kind of partnerships give us sustainability and also helps us think out of the box. So traditional way of funding for large development programs, those times have gone. So we need to kind of think about that how, looking at the successes of Renata and Sajida Foundation. Can hundreds of Sajida Renata can set example in Bangladesh? Like in the earlier discussion, we talked about bKash. Then you have to remember that who was behind bKash? The main brainchild was Fazl Ahmed. So it was a personality like that who initiated a concept or thought about, digital transformation in Bangladesh. So that is something. So if you look at the very root of how bKash happened, how BRAC continuously invested with partnership with international community, like Gates Foundation, Shore Capital, so on and so forth. So it was a tedious journey, and now it's a unicorn, right? So that is what I think impactful ventures can do in globally and of course in Bangladesh, and it is very much possible, and we are proud to kind of say that in our 30 years of our journey, we do traditional things, what is needed for social impact, for financial inclusion, but we do it a bit differently because we have a corporate partnership.
Right. No, I think you put it really well that sort of building businesses or Bangladesh being investable is not just a new trend. It has been there for decades. Yeah. And it's already happened through the foundation of some of those, already, yes, legendary founders and entrepreneurs themselves. Yeah. Moving back to Sajid Bhai, a great mentor of mine, and then he's a veteran in the ecosystem as an investor and among many other hats. Sajid Bhai, you've been known for your deep connections and commitment towards many early-stage investment, not just in the region, but across the world. If I remember correctly, you probably have invested over 2,000 by now through your angel lists network alone. And you probably also bagged more than 15, 16 unicorns in your portfolio. Tell us a little bit about what does Bangladesh uniquely offer when investors are looking into the Bangladesh market to invest the same way you looked into those early-stage investors across the world?
Thanks, Salman. I would say three things. The first thing, one of the philosophy that I use in investment is something like this, that all countries are on the same digitization curve, but at different points. So if you invest across countries, you actually pick up trends. You can see that, okay, where is this country moving? Where is this similar company in another country which has successfully, probably a unicorn or something like that, has grown. And in case of Bangladesh, the first thing is it's still empty. There's a lot of open canvases. People can really build, mega companies, life-transforming companies in this country. It's not as saturated as some of the other countries are in Southeast Asia, South Asia. So that's the first thing. If you invest in Bangladesh, in one of these companies, you're not going to only invest a company that is going to lead the market, but in many cases that may actually define the industry of that market. So this is a unique opportunity which, Rahat was mentioned to some extent that if you miss the bus in some of these markets, this is where the bus is still there, so you can hop in. So that's the first one. The second one, which is somewhat related to the first one, is the risk-adjusted return is higher. What do I mean by that? 100,000 investment in Bangladesh will go a long way compared to 100,000 investment in some of the Southeast Asia or South Asia countries. So a company can utilize your investment much better and probably can come up with a much better return. So your risk-adjusted return, knowing that most companies fail, is higher in Bangladesh. Our governor was saying that he wants to see 5 unicorns. I would say there are opportunities to do much more. So risk-adjusted return, and this is the time to get in. The third thing is sort of touched upon quite a bit on the demographics. So this is a demographics which is primed to grow. The hunger that Oussama was saying, the hustle, the hunger among the people, the regulatory landscape that is evolving but seems to be in the right direction, and of course the support system that you get. So the demographics, the young population, everything is moving in the right and up. So I would say the demographics, the local domestic market is huge, and this is one of the few markets where there are opportunities to invest at a good valuation.
So if I could just ask a follow-up question on that. So again, from your lens, investing in many early-stage investments, there's a continuous shift happening in terms of the type of businesses that are getting more invested, the type of innovations that are getting more priority for certain funds, type of industries that are still continuing to draw more attention from the investors. So if you have to pick a few industries that are more relevant for Bangladesh based on where we stand today, not 10 years back, not where we will be 10 years later. Now, if any investor is looking into investing in Bangladesh, where would you tell them to invest? And where would you tell the founders to sort of go and build their businesses?
So, I did a Facebook post a few months back, and there were hundreds of comments on the industries people think would be the good industry in Bangladesh. But, if you look at what are the challenges in the market, health tech, right? Healthcare is a big issue. What are the challenges? Agriculture. A very specific Bangladesh industry is ready-made garments. It's the largest in the world. If you look at financial services, there are, payment services companies, but then there is a big space in fintech, in wealth management, in lending, in crowdfunding. There are many, many more verticals which are practically untouched in fintech. So, I would rather than trying to build a very cutting-edge, deep tech company, I would focus in Bangladesh in companies that will actually solve the large problems of the population here, which would be health, education, agriculture, and financial services.
Okay. I think I will probably come back to you on why not deep tech or frontier tech, because we still have, we missed the boat quite a lot, and I'll come back to you on that. Coming back to Rahat again. Rahat, so again, we are trying to understand how to make Bangladesh more investable, how to bring in more funding. So what are the most common misconceptions international investors have about Bangladesh to this date? You have been one of the pro-activists online to really scream out loud and talk about what needs to be heard and told, but yet again, we see that there's probably still misconceptions there. Tell us a little bit about what needs to be changing.
I think it's actually kind of a funny answer in the sense that, we have a universe of investors who are aware of Bangladesh, but if you look at the amount of money, so just for context, the amount of money on any given year that is about allocated around the world is about $100 trillion, of which about 0.5% in the sub $500 billion range goes into venture. That majority is taken by three countries, US, China, and India. So the remaining is what Bangladesh can go after. But the reality there is, let's say that number then comes down to 100 billion. Bangladesh has not been able to get that. Now, the number one issue of why Bangladesh is currently not on the radar of a lot of investors. So, and I think the misconception, I don't need a misconception because most investors don't know Bangladesh exists. Now, I'll give you a mathematical or like logical reason as to why. Most investors, so I'm a fund manager. So when I go raise a fund, I have to tell my investors ahead of time, I'm going to invest in X, Y, and Z. X, Y, and Z could be industry. So I could say I'm a deep tech fund investor, right? Or we can say, hey, I am going to invest in Vietnam, Bangladesh, and Pakistan, right? I have to tell my investors ahead of time. When this happens quite often this is what we call mandate. Globally, most countries tend to fall in mandates. Now, what do I mean by that? There are terms like MENA, which is Middle East and North Africa. So if you're from Morocco and you're a startup, you're under the MENA mandate. If you're in Philippines, you're under the ASEAN or Southeast Asia mandate. Bangladesh, as of now, is the largest country in the world that is mandateless. We are not part of MENA. We are not part of Southeast Asia. And there is no real South Asian market because India is so big, they don't need to loop in Bangladesh. So our need and we have to go and build relationships with investors. So one of my main jobs that we don't talk publicly about, but I'm happy to share is when I'm in Singapore or New York or Dubai, I'm meeting with VC fund managers and I'm saying, look, I know your current fund doesn't have Bangladesh in the mandate, but you're investing in Philippines, you're investing in Malaysia. We're pretty close, and these are the reasons our population, our economy are very similar. Same thing with the Middle East. So, for instance, you have seen in Pata, we've co-invested with VentureSouk out of Dubai. In AgroShip, we've co-invested with Sharuk out of Abu Dhabi. It's because we spend time with the investors internationally to let them know Bangladesh is a viable investment for them. And so that is the big gap. It is not that they have misconceptions. They simply don't know we exist. So communication is critical. And by the way, I think Oussama and Razor Capital team have been doing this for 10 years. I want to give a small clap to these guys because they've been here this whole time, before all of us even started sniffing the market.
No, I think it's a good segue to going to Oussama as well. So again, from your global vantage point, what kind of startups or businesses or business models seem more fundable? Because I think in order for an investor, like a global investor like yourself, to invest in any market, you need to have investable, fundable startups. So what are some of the business models? What are some of the type of industries you've found to be more investable for Bangladesh in your global lens?
Cool. First, thank you, Rahat, for the recognition. But we're all in this pain together, regardless of mileage, right? To your question on business models that are fundable in Bangladesh, I mean, that's probably one of the most common topics that I deal with founders or aspiring founders. Because I think the issue is that people see the news and they see what's happening in places like America or China or whatever, and it's very easy to be, influenced by it. And then it makes you forget about the realities of your own environment. That's not to say that the reality is worse or better or whatever, it's just a different reality. And that takes us into what makes a business in Bangladesh fundable, or the model at least fundable, and it's several things. First of all, the most critical thing is that you're building a solution with conviction. That's number one, all right? And that applies anywhere, really. But more so than ever in places where you can make like a pretty significant impact and move the needle. Number two, you should have realistic expectations on your unit economics, all right? I talk to a lot of startups, and they raise a bunch of money, and they start making a few million revenue, and all of a sudden they're like a $50 million company. That's great. Everyone wants a 50, 100 billion, whatever, right? But, I mean, I gave this advice to some founders yesterday, and I give this advice to all of our portfolio. Don't price yourself out. Because even if you have the best business, but you've priced yourself out, you're not fundable anymore. Because no one's going to come and pay your asking price. It's just a reality of the market. Another thing that we really believe at RazorCap in, and the way that we are sort of pushing our startups, and is probably even a requirement of our investment, is here's a bunch of money. We want you to leverage the talent and your position in Bangladesh to go outside of Bangladesh. And what does that mean? What we tend to see is, unfortunately, for whatever reason, people get heavily penalized and discounted on their pricing, and big investors don't like whatsoever single market risk. Like, we've spoken to some pretty big institutions, like the KKRs of this world. We brought a few amazing deals. We even had an opportunity to invest in Bcash in 2020, which is regretful that we couldn't, but it is what it is. And the main reason is it's single market risk, right? So if you want seed funding, Series A funding, 500K, 2 mil, whatever, you'll probably get that if you're a good business, you're a good founder, and you've done the job that's required. But then when you want to go to the higher funding, the higher tickets, and to really go to that promised land, if you will, yeah, you need to find a way to really scale outside of Bangladesh. You stay in Bangladesh, you promote Bangladesh, you build your people, add value here, but offer your services and build your revenue elsewhere. And then all of a sudden, you become a lot more fundable to a much wider selection of investors, right? And then finally, I mean, to be honest, I had prepared some answers on like sectors and stuff, right? But really thinking about it, and this is one of the positives of Bangladesh, is I pretty much think there's opportunity everywhere. It's just you need to decide where can you add the most value, where are you the best as an investor, and where do you want to, sort of spend your time. It could be in agri, consumerism, healthcare, you name it. I think that's one of the unique opportunities in Bangladesh and where it is in its journey, the fact that there's opportunities to do, to really invest in anything here. So, yeah.
I think that's some really good points out there, especially around how it's actually not any specific industries. It's quite still an open market, and as Rahat was mentioning in the beginning, Fizza, I'm going to come to you again. Because you're investing into a lot of mission-driven, impact-driven investments, and Sajida, Renata's background being also in that space as well. When we talk about Bangladesh's sort of geography, demography, our future potential, sort of worries with regards to climate change, with regards to people having access to basic finances. Sajida Foundation is very strong in microfinance, for example, and also like different types of health tech. Because I think Renata definitely built the traditional health manufacturing company, but we still don't have that many health tech companies. So from your organization's lens, how would you shed some light on the opportunities in the climate space, in the microfinance, because financing still is continuing to be a very important area, as well as in the health tech space as well?
So as Sajid was saying, that in Bangladesh, there's an opportunity to define, with your initiative, you can actually define the market. So for example, when we started indulging in the impact investment space, we thought about in 3 different categories. So first of all, so we wanted to, mainly in healthcare space, we wanted to bring international quality services to Bangladesh, where the services where, rich people can pay for it, but the services were not available in Bangladesh. For example, in caregiving, elder care, in mental health, services for children with additional needs. So these are the areas Sajida wanted to indulge in, but want it to be a profitable venture, through which that we wanted to leverage the rich to subsidize, again, SAJIDA's core mandate, subsidize the low-income communities. So in terms of the startup journey, we decided that a segment of SAJIDA will actually be a startup, itself. So we went through that pain with a couple of our startups. That how do you run these startups? What do you need to do? How do you need to learn from your mistakes? So that's kind of a journey, SAJIDA engaged in and in healthcare space. And then the other segment, we decided to partner with organizations who are interested in the climate space, agriculture space, and so on. So we partnered with designing programs like Orange Corners in Bangladesh, or the Climate Innovation Fund with British Asian Trust and Prime Bank, for example. So we started designing programs for mentorship, for business development support, and of course, finances. So then as we are growing in this journey, we decided now we need to work on bigger ticket sizes, with the, support startups who are kind of, kind of progressing in the game. So now we have formed another separate company called Beyond S Ventures Limited, through which, we want to go through the vigorous due diligence process, diversify, financing mechanisms, and so on and so forth. So kind of the trajectory that we are kind of trying to be in is quite comprehensive, where we are trying to walk the talk, actually.
No, I think you really touched a very important point as to how SAJIDA, not just investing, but also going through the experience of building their own startups within themselves to learn the traits, while also creating ecosystem enablers like Orange Corners, for example, to really further de-risk the early stage investments in this country. And I think that further helps foreign investors to have the initial startup early ideas being screened and then be ready for their early seed stage or pre-seed stage checks. I'm going to come back to Rahat. We're in the last segment of the panel. Rahat, you also have been very active in the diaspora space. You've been working with this platform called Videshi, and you've launched a fund from there as well, with bringing in the non-residency Bangladeshis to sort of being involved into building this economy as well. But we haven't quite seen, at least from the outside, quite a strong NRB participation as yet. What do you think we need to do in order for having millions of people who are already living abroad, having a much better positioning and understanding of what's happening in the world, and can sort of bring back their expertise as well as their sort of fund to actually make more funding available for Bangladeshi startups early on?
Thanks. I think the NRB community and the Bangladeshi NRB community is quite incredible. In fact, I think a significant part of the entrepreneurs who've done very well in Bangladesh have come back and applied their skill sets. And some of my favorite companies are mixed companies, where you have a local founder and an NRB founder coming together and putting their joint skill sets together to solve problems from different angles. Now, I think the most important issue that we've seen, and actually maybe I should say what Videshi is first.
Sure.
So for those not familiar, Videshi is an organization that we launched that connects Bangladeshi professionals globally. We are in 15 cities officially across 4 continents and have about 2,000 members. And most of these members are higher in their professional fields, everything from investment banking to venture capital to management consulting, to working at technology companies. We also have a lot of amazing artists, chefs, etc. What's interesting from a lot of their feedback historically is nobody from Bangladesh has ever reached out to them. They don't feel connected to Bangladesh. Now, one of the reasons for that is when we look at the Bangladeshi diaspora, at the very least, we can break it down to about 6 different categories. And the historical outreach has usually not included this group of people. And these are the people who are at Facebook, at Uber, at Goldman Sachs. And these are the people with capital, expertise, and network access. And what we found is if we are able to first connect them locally and then connect them to trusted parties in Bangladesh, they have been able to build or rebuild that relationship that they've always wanted. The 3 categories that we often see that are perfect fit for this are Bangladeshis who were born and raised abroad or left a long, long time ago, who are now, say, in their 30s and 40s and high-earning professionals. You have children who have recently been born, not recently born, recently graduated from school, who have this desire to connect with the motherland. And then, of course, you have this newest kind of group who are Bangladeshis who went abroad and say in the last 10 years, who still feel disconnected, especially recent events, they want to give back. We've had success in getting them excited. We know that not everybody is going to do everything, but a couple of projects that we've launched, one is Bideshi Invest, which is an angel investment platform. We have over 1,000 Bangladeshis globally, all high earning. For instance, there was a $12 million round for Patao that was announced in September. 400,000 of that came from the Bideshi Invest group. Shiko recently closed a round. 250,000 came from there. And we are recently working on a project with Sajida Foundation called Bideshi Catalyst, which is a mentorship accelerator program. We've chosen 5 companies so far from Bangladesh, and that number will continue to increase. But these mentors that we have are the global top-tier Bangladeshis who are now actively working with our founders, and many of them are present today. And what we're then doing is after we get them to a certain stage, we're doing 2 things that we've seen historically as missing. We're taking them directly into the Bideshi Invest, so all the Bangladeshis around the world can put in as little as $1,000 to contribute to making their startups a success. But secondarily, we work with organizations like Razor, like Accelerating Asia, to make sure that there is a funnel that as they're operating in our program, they're able to then reach out to Oussama, reach out to Craig. Craig actually hosted a session 2 days ago to teach all these founders in an intimate setting how to get to that next step in a specific space. This kind of collective action we found to be incredibly valuable. And I think if we are able to repeat this over and over and do it in a trusted, high-quality basis over the next 5 years, we'll be able to link the diaspora to the local market. Now, there's one final thing that I think is very, very important here, and I think Sajid Bhai gets this as well as anybody. If you look at Indonesia, Vietnam, Pakistan, India, there's one thing in common of how their market scaled up. They activate the VCs are from their country who are based in those markets. We have Bangladeshi VCs in California, in London, in New York, in Dubai, who are currently not part of this fabric. So we need to make sure they are part of this. So when they wake up and they get a Bangladeshi deal in front of them, they get extra excited to invest in this country.
Oh, thanks, Rahat. I think first of all, let's give a big round of applause for Bideshi, so really bringing the NRBs, which has been missing. I mean, you did mention those who miss China, India, or Indonesia. I mean, for those NRBs, this is actually also their time as well to come to Bangladesh and invest. So I think there couldn't be a better time. Oussama, I want to come to you before we wrap up. We move into the sort of the closing notes for everyone. Every time foreign investors are investing, 2 things come up quite often. One is the regulatory regime, which sort of often goes for and against in terms of their overall interest into the market, because they are investing at the end of the day from the outside. And the second is their exit opportunities. So what do you think are some of the still opportunities for investors to see as leverages they can take in Bangladesh, where funds like Razor Capital or even the growth stage funds should be more confident because of the regulatory regime that we have or that has improved over the time, as well as sort of the exit opportunities when you are investing into local startups?
Cool. Okay, where to begin? On the topic of policies and confidence and stuff like this, there's high-hanging fruit and low-hanging fruit. I'll touch on the high-hanging fruit, but I'm more interested in the low-hanging fruit because the high-hanging fruit is a lot more long-term, and everyone knows what I'm about to say, but just creating a long-term sustainable culture of accountability and transparency and governance and stuff like that. But it's not going to happen overnight, so I don't think there's much value for me to focus on that. The low-hanging fruit is, in some ways, bidashi, which is, when I say low-hanging fruit, it's not meant in a bad way, but it's like more easily attainable, right? Another thing is let's say, money controls on Bangladeshis. I think the fact that Bangladeshis cannot own equity outside of Bangladesh or are restricted on equity and have to go through all sorts of controls just makes people's lives difficult. I've invested in a few companies with Startup Bangladesh, and I'm sure Rahat here at Anchorless also has seen the same, where you have to do dual structures, a local entity and then a foreign entity, and then you have to do share swaps and all that stuff, and it's just like wasted time and money. I think regardless of anything, all companies will either be Delaware or Singapore because it's just easier. The transaction is easier. Yeah, sure, you can have like a local company and stuff like that. But I see this in all emerging markets, not only a Bangladesh thing. But at least what I see in Bangladesh is these controls. I mean, we've exited one Bangladeshi company. We invested in one company that was a Bangladesh incorporated company. We invested there and then we sold our equity. And to get our money out took like 9 to 12 months. I had to come and show up at the joint stock company, and they're like smiling, like, what's this foreigner doing here? It's like very interesting. It was a nice experience, but I mean, the fact that it took me 9 months and just like silence for weeks and weeks, and then you hear something, it's like, I just think it's very unnecessary and something that you can get rid of relatively quickly. That's one. Number two is, I'd love to see more Bangladeshi family offices, and that is like sorely lacking. And I've come to this conclusion because I saw like in Pakistan or India or China or even Vietnam or Philippines, like the families in Philippines, for example, the 4 major families all have their own venture arms that operate as family offices. Pakistan, the same. I think from a policy perspective, whoever governs the country, whoever sort of specifically looks at this part, needs to create policies to incentivize the creation of family offices, wherever they might be incorporated, it doesn't matter, but just a Bangladeshi family. And then more important than that is incentivizing these professional and institutionalized outfits to deploy capital in Bangladesh, right? In a free market society, or even a social market society, you can't hold something against someone for wanting to invest in A versus B or C versus D. At the end of the day, you have to protect your capital and see what's the best return. But what you can do is make the incentives so good or so clear. I don't know, tax breaks, or like, I lived in the UK, there was this EIS, SEIS, you guys can look it up. The government would literally give you up to like, I think, don't quote me on this, but I think it's like 60-ish% return. And the way that they do it is they eliminate it from your tax. So for example, you put 100 grand in a startup, then you get 60K back in like discounts on your taxes. So that incentivized tons of even retail investors to go and put seed money and so on and so forth in UK-based companies, right? So I think if there's a culture of family office creation, where really a lot of the cash would sit, and then policy changes that really incentivize Bangladeshis to put that money in, you would get liquidity in the market. And more importantly, for a foreign investor, what they want to see is they want to see Bangladeshis invest in their country. They want to see community leaders, business leaders, whoever it might be, to take whatever they're generating and put it back into the country. I'm not saying that it doesn't happen, but I just don't think it happens enough because of the policies that I highlighted. So I think these low-hanging fruit I think if they're dealt with whenever, I think it'll go a long way to bringing money in and making investors confident in deploying.
I think that was fantastic, by the way. I think great sort of summary for our policymakers in the room and also private sector professionals and industries who are also here for considering structuring their family offices and funds as well. And there's no alternative to it. It was actually a family office fund that was launched today, this morning, before we started, a $1 million fund for founders in Bangladesh. It's Infusion Partners in collaboration with more. So I think we should have more of this happening going forward. So we're actually running behind this schedule today, so I'm going to do a rapid fire 30 seconds closing remarks, so you can start with that. So closing remarks for the founders, the investors, for the summit, and then what should you be expecting them when you come here next year?
Talking to us?
No, just
in general?
Just in 30 seconds, yeah.
The ship hasn't sunk yet. Keep holding. The land is only over the horizon, and you'll get there. So, keep doing what you're doing.
Awesome. Rahat, it's a very good one.
I want founders to remember that capital is globally competitive. So when an investor in London, New York, or Tokyo is looking at Bangladesh, they're not choosing the best in Bangladesh. They're choosing the best that they can find. So as a founder, you need to show up on time. You need to have the great pitch deck. You need to be very articulate. You are competing against the entrepreneurs from Vietnam, from Australia, from Saudi Arabia, from Pakistan every day when you're pitching. So always show up at your best.
Okay. Fizza.
So I would say be bold, be purpose-driven, and be consistent, and learn from your failures, and rise up. If you don't fail, you cannot succeed. So that is kind of the basic, thumb rule. So and there is no other way but to hard work. There's no easy money in this world, and it's transient. And Bangladesh is a prime example of what is happening. That you need to work hard, be persistent, and reach your goal. And overall, remember that we have a global responsibility. We are a global citizen, and we need to play a part in changing this world. Addressing the climate issue, addressing the extreme poverty issue, and each of us we have to play a role in wherever we are. So yes, there is no harm in profit making, but limiting your greed and making social impact. That should drive you, not only money.
Thank you, Sajid.
After all the bells and whistles, there is no alternative to a great business. Unless all the numbers, the critical numbers are not moving in the right direction, nothing else will matter. So build a great business, things will follow.
Thank you so much. I think on that note, I don't want to summarize the session. I hope all of you took some great notes. There's a great observations from all of our panelists with regards to how you need to build your businesses, as well as for the investors looking to invest in this market. So we couldn't have any better session to start with and kick off the panel today. So thank you so much for your valuable time and for joining this session. Thank you so much.